Hello everyone, welcome to the Currency and Commodity Buzz. This is Manav Modi, your bullion analyst. Let's look at the March outlook for the commodity overall segment. Gold overall has had a fantastic month. Overall YTD returns have been to the tune of over 10%. If we talk about silver, silver has also gained over about 2% if we just talk about from Jan 2023 to up till now. So definitely a good and a fantastic run for gold and silver prices both. Let's look at what led to this. We've seen the move started after the Governor Powell's testimony where he raised the overall rate hike expectations. However, soon after that we saw the SVB and Credit Suisse fallout happened. Fed policy meeting was also scheduled. So banking concerns, higher inflation and global growth concerns led to the inflation and interest rate slowdown sort of expectations. Eventually, in line with expectations, Fed raised by 25 basis points. Gold and silver were supported at lower levels. If I just talk about the outlook, we do see that we do see profit booking from the highs for gold for about at least about 1,000 to 1,500 points, but that could be a buying level, and sideways to positive could be a bias for both. Talking about the energy segment, we've seen that oil prices also were weighed down in the previous month. Almost about a 9% fall, just above the 15-month lows were the prices for crude oil. So if we talk about the major fundamentals that led to this fall, definitely macro uncertainties, global growth outlook and the volatility in dollar index were the primary factors. So this move was not majorly because of the oil fundamentals, but because of the US banking concerns and the macro uncertainties that we've been hearing about. If we talk about the overall downbeat in the market, the mood is because of the buildup in inventories, and also the physical market suggests some signs of weakness. If we talk about the major investment reports also, they are suggesting some lower bullish forecast. Primary focus will be on the inflation, higher interest rate sort of an expectations, and the OPEC related comments that come in. Talking about base metals, we've seen that copper prices witnessed a recovery by about 6%, primarily because of the lower stockpiles. If we see that this demand was seen on the back of the China's easing of its zero COVID policy. Financial stress, US banking concerns were one of the major trigger for this sell-off in riskier assets. However, bailout measures by various institutions and the US Fed meet put a cap to prices. If we see major investment bankers and players in the market see that copper could touch record highs this year. Goldman Sachs even believe that visible copper inventories could diminish by the end of September. We've also seen that copper output has increased in the first 2 months of 2023. If we talk about Chinese demand, it has gone up by about 13% on year-on-year basis. This picked up after the Lunar New Year holiday. Also, if we talk about mining executives have been raising concerns that new supply has been getting difficult to get a boost, especially with copper declining grades. If we talk about the outlook, we see buy on dips kind of strategy could be maintained with more 5% upside from the current levels. Thank you. This was your update for the month of March. For more updates on commodities and currency, do subscribe to Motilaloswal.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.